Welcome back. If you think older homeowners with stellar credit and quite a bit of home equity can get a loan easily, think again. Yes, the cat is out of the proverbial bag because the truth is many older homeowners are being declined when they apply for a mortgage loan at higher percentages than their younger counterparts. And we're going to look today at a New York Times column that really puts a point on this particular challenge and also the opportunity it holds for you as a reverse mortgage professional. A great credit score, but she can't get a mortgage. Despite solid financial track records, many older Americans have a hard time refinancing because of their mortality risk and lower retirement incomes. And the Times recounts a story of one homeowner who was unable to get approved for a loan despite a long work history and plenty of home equity. In late 2019, Molly Stewart's contract ended at the community college where she worked. Normally, I just get a new job, but then COVID happened, she said. So she collected unemployment for a while and then finally retired. In 2021, hoping to get some financial breathing room, she tried to refinance the 3-bedroom ranch house that she had purchased 18 years before in Sacramento County, California. And looking at her particulars, you would think that she would easily get approved for a home equity loan or mortgage. She had a 30-year work history. She also has a credit score in excess of 800, excellent. And she has only about $100,000 owing on her home, which is worth $500,000 today. That's quite the equity cushion. But despite that, the mortgage company denied her application. I didn't qualify for a refinance because I didn't have enough income, she said. It was extremely frustrating. But her situation is not uncommon because studies have shown that older applicants are more likely to be rejected for most types of mortgage loans. And as reverse mortgage professionals, as yourself know, the majority of one's net worth is often tied up in their home. However, older homeowners, 65 to 74, that may account for 47% of their overall net worth. So unlocking that accumulated equity is extremely important. Lori Trowinski, Director of Finance and Employment at the AARP Public Policy Institute, said, "A house is not a financial asset. It only turns into a financial asset if you take out a loan or you sell it." The Federal Reserve Bank of Philadelphia looked into this issue and published their findings. They looked at more than 9 million mortgage applications that were collected through the Home Mortgage Disclosure Act, that is the HMDA, from 2018 to 2020, and they found that rejection rates actually increased steadily with age, especially for those over the age of 70, noting that the average rejection rate for all ages was 17.5%, but for those in their 60s, it exceeded 19%, and among those 70 and older, it was more than 20%. One of the issues is the mortality risk. During the course of a 30-year loan, someone dying is really inconvenient to a lender and can be costly, said Alicia Manel. Now, in this week's edition of the Industry Leader Update, I'm going to dive into this a little bit deeper, and so I'd encourage you to watch that today. We're going to look at the challenge that these older homeowners are facing and the opportunity for you to present options that they can actually qualify for. Yes, a HECM, a proprietary reverse mortgage, or even an asset-based equity loan that isn't a reverse mortgage. Yep, we're going to look at all of those, so be sure to check out that episode. And speaking of the challenges that older homeowners face when it comes to tapping into their home equity and getting qualified for a HELOC or an equity loan, HighTechLending has announced its newest version of its Equity Select. Housing Wire reports that the lender is targeting borrowers who are declined under traditional second-lien underwriting. HighTechLending's Equity Select debuted in September. In fact, we interviewed the CEO of HighTechLending, David Peskin, and the Senior Vice President, Eric Ellsworth, but now they have a new version. Now, that initial version was a first lien only type of loan, so that would mean that they would have to pay off the existing mortgage to qualify. Equity Select allows a lender to set monthly payments as low as 1% of their annualized loan balance, and it does have a payment cap to protect them against any payment shocks. Any unpaid interest, if they're paying less than the interest accrued each month, is added to the loan balance and is repaid when the home is sold or through a balloon payment, that's after 40 years, that will not exceed the property's value. Equity loans that are allowed in the second lien position are especially pivotal today, as many older homeowners secured historically low interest rates on their first mortgage, and quite frankly, they're unwilling to let go of those. So now we have Equity Select in the second lien position, as well as Finance of America's Home Safe Second. HighTechLending CEO and President David Peskin told Housing Wire, "Today, a large number of borrowers are getting declined," adding that as many as 40% of borrowers between the ages of 40 and 60% over the age of 60 are being declined on a second lien by a financial institution. These include those that are self-employed or on a commission, where their cash flow may fluctuate, or on a fixed income. And here are the states where Equity Select is available for homeowners. We have Arizona, California, Colorado, Florida, Idaho, New Jersey, Nevada, Ohio, Oregon, and Utah, and more states are being added each month. Housing Wire's reporting notes that the Equity Select is only available for primary residences, although borrowers can use the proceeds to purchase a second home. And another interesting point is that HighTechLending is partnering with banks and credit unions so they can help alleviate some of the pain of those borrowers who have been rejected for their loan application, noting that they've been speaking to some banks and credit unions about offering that loan to their customers, given that their guidelines are very strict at the 50% debt to income level, and they're turning down customers all the time. And our last story this week comes from a recent blog post from Longbridge Financial, and it provides some excellent and practical tips to help older Americans avoid being scammed online, and some cybersecurity protocols that will really save them a lot of headaches down the road. Staying safe online, cybersecurity tips every homeowner should know. Sadly, scams are becoming increasingly common. In fact, last November, I was a victim of a banking scam. Yes, people somehow could get access to your bank account. So this hits everyone of all ages, but especially older homeowners who can be an easy target. Longbridge cautions to be aware of phishing emails and texts, which often look like they're coming from a legitimate bank, retailer, or government agency, or even a family member. They may ask you to click a link, download an attachment, or provide personal information. There's also identity theft, where they steal your social security number or account information, and they can open accounts on your behalf, make purchases, and even take out loans in your name. And pressure tactics. Anytime someone is pushing you to act now, or a sense of urgency, or that your account will be closed. And I would add, any time that a homeowner receives an advertisement saying that their loan benefit on a HECM is going to run out, that is a sure sign of a scam as well. To protect oneself online, they suggest using strong and unique passwords, but avoid using birthdays, addresses, or simple patterns. There are password managers available. Personally, I use one called 1Password, which is excellent, and it just makes it so easy because it plugs into your browser. And speaking of hassles, yes, software updates, especially on your phone, we find them annoying at times, but they are necessary because there are security patches that usually aren't put out front. It's usually new features, but almost always there's a new security patch as well to help stop a vulnerability that they found. And lastly, they advise older homeowners to look at the link before they click it. Now, how does one do that? They simply say to move your mouse over that link, and then look in the address bar, which is typically at the bottom of the browser, to see what it reveals. It may show one thing on the link, but it may be linking to another site, and that is also a sure sign of a scam or a phishing attempt.